to, just introduce yourself, your angel investing journey, which I think is really important for people to understand, and also your angel, your strategy journey, so to say, in terms of how you've come to put your strategies together. So Laila, I'm going to start with you, and then I'll move on to Steve and then to Tony.
Thanks very much, Stephen. It's great to be here. Welcome, everybody. Great to see some old friends in the group. My name is Laila Macharia, and just very briefly, my background is that I'm a lawyer by training, and started a journey of entrepreneurship and employment in the areas of finance and investment, originally in real estate, but I've since transitioned into a broader asset class, approach to asset classes. I used to do a lot of finance and investment, both personally and in employment in the US before I moved to Kenya, where I became a real estate developer for 10 years. And after that, then joined the board of Centum Investments, which is a listed PE firm in East Africa. I, from then, started to really broaden my view of investment, and I'll explain later if we get there why. Since then, I'm also on the board of Absa Bank. I mentor for Endeavor. And I also am a very big fan and advisor and supporter of VBAN and ABAN, because I think that the work that we're doing in investment it's really important to have a robust ecosystem at all stages and have investors that are supporting that. In my view, I'm a big, passionate believer that everybody should grow wealth. And I see wealth either at the country level or as the individual level as a very important factor in dignity, in freedom. So I always say that my finance and investment is my route to social justice, right? So you can't have all those good things if people don't have money. And so I'm very unapologetic about building wealth at a country level, at an individual level, and that's what I'm about. I've been investing as an angel since 2007 in groups, individually, large investments, small investments, and I'm really excited to share that journey and what I've learned along the way. Thanks.
Thank you, Laila, for that really good introduction. I'm going to jump on to Steve Xavier.
Hello, everybody. My namesake, thank you very much. I hope you can hear me well. I can see very familiar faces, both as speakers and in the audience, so it's pretty nice. I would say that I'm kind of the odd one out, mostly from Ghana and a Frenchman as well. My journey to angel investing actually started in the UK, in London, where I invested in a young woman developing food, affordable food and retail food for lunches. And then I got hooked. It was such an incredible journey that I got hooked. So I'll tell you a bit more along the way, but my current role is leading a program for the German Development Agency in Kenya in agribusiness, renewable energy and technology. And I also lead Accra Angels with co-founders in Accra. So it's kind of a double whammy, 3 hours difference. But again, I'll tell you more. Thank you.
Thanks, Steve. And the good thing about this conversation is that we're going to get different perspectives from angels across the continent, and also now from Tony, who will give us his perspectives. And he's not currently in the continent, but does a lot in the continent. Tony, go ahead.
Yes, hi, good to see everybody today. It's great to be here, see some familiar faces and some familiar names. Tony Chen here. I'm actually based in Chicago. I'm essentially a serial entrepreneur the last 25 years. So I've started 5 companies, multiple failures and multiple exits. Ended up following my wife to Kenya, and we lived in Kajabi for 3 years. And that's when I had about 300 coffees with entrepreneurs and just fell in love with the country, fell in love with the entrepreneurs I was meeting, ended up making a handful of angel investments, and that's kind of how I got started. Currently, I'm a partner at Verdant Frontiers, which is a group that's building sort of large-scale businesses across the continent and leading our tech investing arm of what we're doing.
Thanks, Tony. And maybe, Tony, I'll start with you because I guess your angel investing strategy journey, I mean, the session today is all about angel investing strategies, but yours seem to have led you all the way from the States into the continent. So first of all, what's your angel investing strategy? And have you seen that change over time?
Yeah, so I think every deal I do, the strategy keeps changing. And I think that's totally fine. So I think honestly, so my first angel investment was actually stateside, actually to a brewery. And then my first investment in Kenya was in 2016 into an ag business. And over time, really for me as an entrepreneur, my core thesis is just for these early stage startups, it's really all about the entrepreneur and all about I would say it's their pivoting ability and their perseverance. Because a lot of times you meet people working on very early stage stuff, and really the business they're working on today is not going to be the business they're actually going to be working on, 6 months from now or 12 months from now. So it pivots a few times, but it's really more about, can this entrepreneur, learn from the market and quickly enough to adapt quickly enough to get to the spot where it really, really works. So really for me, that part has stayed the same in terms of I really focus my energies and my due diligence on the entrepreneur themselves. But obviously as angel investing has changed, or the ecosystem has matured really quite a bit, I love co-investing with others. So I just have realized, man, I have no idea what I'm doing. I need to work with people who we can all together have some collective wisdom, and we can look at the same business from different angles and then learn from each other. Even if we say no, we actually learn from that deal saying no. So that's a little bit how I've changed. It's like I love investing with groups.
Thanks, Tony. I think people are coming here to learn from us, pun intended. But I think investing in groups is one key learning point there. So Laila, let me jump on to you. Same question. What's your angel investing strategy, and has it changed since you started making your angel investing? I think you stayed back in 2007, 2007, yes.
Yeah, I'm nodding because what Tony is saying, there's so much resonance there. So the thing with me that's a little bit different is that my investment journey has mostly been, I did say that I did real estate in the US. I used to buy small multi-unit apartment units, fix them up and resell them. But that investment environment is extremely different. So I really consider the time back in Kenya as the core of my experience. And for me, it's been very intertwined because I'm also a serial entrepreneur myself. So the lessons that I'm learning about the market and about how to approach companies also trickle into the way that I approach investing in others. And because of that, of course, I came back to Kenya and I had to really understand, I came back as an adult when I had left pretty much as a child. And I had to really understand the environment, how people think, and it's very, very different. And I think we'll get into that later because this is really, this is Africa. I think for me, originally, I was very agnostic, very open, very enthusiastic about jumping into things. But I think with experience, what has happened is that I too have become much more humble, much more deliberate. I've also become much more, in the early days, especially when I first came back to Africa, I was very excited, and rightly so. It was during the Africa Rising craziness. And I was so excited about all the potential for this region and remain so. But because of where I was also personally at that time in my life, I saw a lot of upside, opportunity, potential. It took really having some serious failures, both on the investment side and the entrepreneurship side, to really start getting an appreciation for the downside, for risk. Why some people's entire training is just about what could go wrong and how do we make sure we don't lose everything. And so now I'm much more seasoned, much more balanced. Also, I have less FOMO. There's something in Kenya whether it's quail or quail eggs or whatever the trend is, everybody wants to jump into it. And as I've matured, I've really learned that sometimes I'll say no to a deal that becomes the next unicorn. This has happened a couple of times, and that I'll live with that. I did what I could with the information I had at the time. I made my decision, and sometimes it's going to be right, but this is a risky business. It's fun, it's beneficial. it has a lot of returns, but sometimes you win some and you lose some. So what that has done for me is that I too have much more of a bias now investing as in groups. I also will not go into a tech business if I don't have a tech person with me, or I don't really, really understand the solution. And then now I've tended to narrow my focus into about 5 key industries that I feel are very linked to also my social impact interests. The great thing about investing in Africa is that, you know, a lot of businesses, in addition to making jobs that are badly needed, you can really advance health, you can really advance education, or whatever it is you care about. For me, it's data, trying to create in African markets the ability to understand sectors. So I love indices and trackers and all kinds of apps that can help us sort information, understand what's really going on, especially in the informal sector. So those are some of the ways that I've evolved in my thinking.
Thanks, Laila. And I think for anyone sort of like participating in this conversation, I think it's really good to see that move, right? I mean, what Tony sort of like mentioned, what you've just mentioned, I don't know what Steve is going to tell us, that the strategy keeps evolving as you sort of like keep learning, as you keep, you know, maybe getting some failures, some successes, understanding the context much better. Steve, to you, you seem to invest across the world, literally. So how's your angel investing strategy changed since you started? What is it?
I would say it has clearly evolved. I hope you can hear me well. Sometimes my mic is a bit wobbly, but it's funny how, you know, I feel like we're all becoming scarred by all our failures and successes, but mostly the failures, and really we learn the hard way. I've made a few losses that really taught me to learn. Look, there's certain signs when you see them initially, do not invest, and it's always also the same thing. I've really come to appreciate the group working and investing as a group, because obviously, you know, it's the network effect, and you have different people with different sort of skills that really support you. The perspective I would give to that is I had a bit of a different strategy, I think, you know, from Laila and Tony, which I had said to myself, look, this year I'm going to invest and look for these things. Next year, I'm going to invest for these other things. So for instance, all of 2020, I decided that I was going to focus on the usual thing I like, obviously AI, machine learning, and so as a kind of an enablers to other different things, so fintech, health tech, you know, et cetera, et cetera. But last year, I decided, look, I'm going to look for women-owned startups, owned or led, obviously. And then I was particularly looking for startups that would really try and tackle cybersecurity and basically Bitcoin, crypto, etc. And I found a few companies, etc. But ultimately, I did not invest. There were certain things that did not happen, at least for the cybersecurity ones. And one in which I still have an eye on it, etc. But I had like an objective one last year. 2020 was last year, right? So obviously I didn't get to see or meet or engage with all the startups that are, so I've kind of transferred that to this year. But I would say that when I look at my portfolio, generally speaking, I've come from a top-down view of, okay, I want to invest from these things because it's my personal interest. And I spent a lot of time building my own skill around it. I went online, did a certificate in cybersecurity. I did one in fintech, in product management, etc. As a person, I'm a bit of a geek for that. So I spent some time learning about stuff. And maybe one anecdote, and then I'll pass on to the next subject, is that I wrote my first website in '98 with Notepad, HTML typing. Right. So I think Tony is nodding. Yeah, I know what it is. So I'm kind of a geek on that. So I like the techie stuff. So now I would say that the way my strategy as an angel investor has evolved is that before I used to be very geographic, like, Accra or Ghana or, and, since I live more in Kenya, obviously I got to know the Kenyan ecosystem, but I take it very much on a person-to-person basis. And also, I've come a long way from the FOMO. You know, there's a particular transaction that was going on recently that I was like, oh, I really would want to get in. And then 3 months after, I still didn't get in. And then the executor said, damn it. You know, but I say, okay, fine. I'm done with it. I had other things that I want to do. So now my strategy is all about, and I'll give you a little trick that I use, really talking about the changes right from top down to more personal. I always ask the entrepreneur that I end up investing in, if you have money now to invest in another team or another startup that you know, please introduce me. It's a very simple question. And what I realize is that actually people think about it. I say, actually, yeah, I wouldn't mind putting money in this particular company. And actually, sometimes I end up investing with me, right? But they hadn't thought about it personally. So I asked them a question today. If you had a lady that is doing something great, but you think that if you had the money, you put money in, as an entrepreneur that I'm putting money in, right? You know, which one would you recommend, one or two? And then they do that, and it really builds more my network. Then obviously, if it fits my ticket sizes and my geography and my appetite and also the personal relationship, then I would invest. But it's really what I use now. Thank you. Maybe one last point on the cultural differences also between Ghana and Kenya, for instance, to be more specific, but more broadly between West Africa, Anglophone, and East Africa. I have a feeling that generally speaking, entrepreneurs in the Kenyan ecosystem are much smarter about the sources of investment they're going to go for. So specifically, there's so much grant money in East Africa that sometimes you're competing against that. And that's one of the things I noticed. Whereas in West Africa, there isn't as much capital. So I see that entrepreneurs tend to really go for more commercial angel investors, etc. That's my kind of my small notice on that. Thank you.
Thanks, Steve, for that. Tony, I'm going to jump to you. And I want us to locate angel investing in terms of, you know, why angel investing, and especially in the continent, right? You have so many other investment options that give you decent returns. I mean, I guess it's changed over time. Real estate used to be one of those: buy a plot of land and just wait for it. You have your SME type investments. You could always go for shares and so forth. So you know, why choose angel investing in the continent with all the risk factors that always people talk about, the risk that is there, as opposed to any of these investment asset classes, and especially for you from the outward coming in?
Yeah, it's a good question. I think that first of all, I think it's just such a great right thing to do for the ecosystem, right? So, you know, I'm investing in deals today alongside other Kenyans and others that these deals could become, you know, African unicorns. And then all those investors who've made all that money are going to turn around and invest in more, you know, startups, and then again and again, generationally, you know, over time. It's just, you know, back to Layla's point of just wealth creation. Some of these angel deals that you will do could turn into something really, really big, right? The chances are low. And I don't want to like hype that too much, you know, because the risks obviously are high and you're going to fail out of a lot of them. But if you do hit it, I mean, so I think the wealth creation that it does for the entrepreneur and that set of investors, and then the trickle down effect of how that will play out further is just massive. It encourages more people to become investors. It encourages more people to become entrepreneurs. So all that is for sure. Secondly, for me personally, I just think it's a lot of fun. I mean, I just think I love being part of the entrepreneurial journey. I mean, I can't get enough deals in a way. It's sort of like, I just love being part of the entrepreneurial journey. So the thought of being a part of the early stage of like the starting of something new that hasn't been done yet, and figuring out all the challenges and making it work, I think it's a lot of fun. And actually that's where a lot of value is going to be created on the continent, actually everywhere, is creating something at that level, at that stage, and then figuring out a way for it to scale. So yeah, sure, you could get, you know, land and real estate, and I think you should, right? Like, don't portfolio weight, accordingly. Don't spend more than 10% of your net worth on angel investing, but be a part of this. And honestly, I would just say the first few deals, do it with people and almost do it for the education. Like, you could spend $1,000 on some webinars and reading books and whatnot. Why not just spend that $1,000 doing some deals and learning from the real world experience of what it's like to do it.
Thanks, Tony. Laila, do you agree? And especially for you, you came from a very, real estate, it's very stable, so to say, it's very structured in terms of investment. Then, you're in this chaotic world all of a sudden. Do you agree? Do you have some more points to add on that?
When you asked the question, I was going to say the answer is we're gluttons for punishment. No. You have to remember that I was in real estate development, which has actually taught me a lot about investment and why moving more into VC type and more general investment, other classes has a lot of value, especially you can get into things that are more working capital negative. So I agree, there's many options to invest. Land is still something that you can invest in, at least in East Africa, and wait around, and it'll eventually appreciate if it's in an urban area or close by, or even maybe not. We also can put money into T-bills, lend money to the government, sit back, and then there's the stock exchanges. And I agree very much with Tony that the idea is to make sure you have a balanced portfolio. So do a little bit of all of that, and also have money that's even more conservative holdings. Yeah, so you have a nice blend. But for me, it's true. I agree. It's about investing in the ecosystem. It's about creating jobs. It's about the potential for the startup segment of your portfolio to be the place where you can really move the needle and where your expertise really makes a difference. If you work with a founder, and not only do you encourage them, and sometimes it's true, they might not end up being a unicorn, but the flip side of it is you're really even preventing pain. So sometimes I say that there's a lot of mistakes I made when I was building my businesses, where if somebody had been there, it might not have ended up being the hugest thing, but at least it might not have failed, right? Because some of the mistakes I made were really rookie mistakes, and a lot of value was wasted that could have been saved. So for me, it's the gratification of all those things, investing in the ecosystem, mentoring and supporting a founder. But I'm also a creative. I also love to grow things. I love to apply strategy. All my personality tests, I'm off the charts in strategy, right? And translating strategy into execution. So I love to see that come into fruition. And then in my general personality, I love to nurture hope. I really believe in being there for people and helping encourage them and helping prove that the world is a good place. So this is one way to do that.
Thanks, Laila. Steve, do you agree?
I couldn't agree more. Portfolio strategy, investment strategy, etc. But it's funny how I'm fundamentally a financial person. It's like I did, equity derivative, fixed income derivative, equities, etc., etc. So I'm a very big finance person. And strangely enough, I started angel investing without looking at portfolio strategy or anything. I said, look, I like this thing, let's go for it, So sometimes you can be totally irrational about it. But what I've realized over time, and that's also part of the learning journey, is that actually, in a very natural way, you need to think that, okay, any money that you put in angel investing, you can lose. That is essential. Unless you structure it as a debt, like in Ghana, when you talk angel investing to a lot of people, they think, oh, what is the interest rate? Like, no, it doesn't work like that. So it's been a long journey as a angels to try and teach people about angel investing. It's like money you can lose. So they look at it now, I'll put it in land or property or whatever. So that is important. But to come back to why people should put money into angel investing and startup, I think there's a kind of a pecking order of asset allocation, as mentioned before, whereby I use the example whereby I actually spend a bit of like 8 to 10 months doing financial management financial advice to Africans in the UK, and I always tell them, look, whatever you do, the primary thing you need to have is get a mortgage or get a property. That's your first level, and then get all the other asset classes that you can invest in. But at least you need to have your own house. That's the basic, and then so essentially, what I'll recommend is if anybody is interested to do angel investing, with the technology today that is available, with $1,000, $500,000, $1,000, $5,000, depending on the amount you're able to put in, you can still, contribute and try yourself out. Thanks to groups like VBAN, CryAngels, etc., but also crowdfunding website, etc., that gives you a feel of it. So I think for me, the message to everybody today on that aspect is angel investing is not just for people who have quote unquote money. It's you can try yourself at it and learn through the process and build your experience and knowledge around it. And again, I would say make sure you have your baseline covered, school fees covered, whatever, that, and then you think about the money and the rest. Yes. I'm very down to earth in that. So that's kind of in summary, continuing on the other speakers' mindset. It's really important to understand that you may lose, you may win big. And maybe in addition to that is the journey should actually be the reason why you're doing it first, I think. So you're contributing your experience, your knowledge to startups, to entrepreneurs, to people that you get along and can really advise. And I would say, though, that is sometimes very difficult, because of the time zones that I manage. People will be sending me WhatsApp messages at 1 a.m. or 11 and asking questions. Can I speak to you? Can you introduce? Like, no. So now I put my phone on flight mode from 10 p.m. to 6 a.m. Otherwise, I know I'll be people calls, etc. But that's kind of the flip side of it. Yeah. But it's a very nice journey. Thank you.
Wow, thank you, Tawi. And I think I'm going to stay with you for this other question. And then I'm going to request, if you have any questions, kindly type the question onto the chat and I'll just pick it up from there. And then after this round of questions, then you can sort of get deeper with those questions I'm going to be asking. So Steve, I want to speak about the models of angel investing and even how angel investing has been couched. And I think you mentioned this, that you started doing angel investing without knowing you were doing angel investing very early on, right? Now, of course, we have very clear models. Yesterday, I had this huge debate in terms of, how should we define an angel investor? Should they only invest in venture type investments? Can they invest in your SME type investments? If you don't put money in a restaurant or something like that, that's still an angel investor. And then there's also these bits that, the theory is that, you invest in 10 startups, only one of them is going to make it or two of them are going to make it, 8 won't make it and so forth. And I guess we can keep on, the models are there that, we've received and we're sort of trying to figure out. And I like also what all of the three of you have mentioned in terms of the transition that happens, right? You start with these fixed elements and then it changes and so forth. So question then, to the question now is, one, should we accept these models? In terms of changing them, how should we change them? And, what should they look like when they land into the continent, knowing what you know about the context we have in the continent?
That's a thesis, my friend. Honestly, it's a thesis because it's going to be difficult to kind of give you one answer. But so let me go back to the actual definition of angel investing. I don't know if many of you know, but originally an angel investor was somebody, I think it was Broadway. They were called like that because they were angels to come and invest in a Broadway show. They were called angels, right? Because that's kind of the original definition, if I remember well. So it was like more in the creative industry where somebody was coming to invest in a show that was being put up, and it was taking obviously a financial risk by putting up and betting that the show is going to be successful. And then, so the same way people put money into a movie and then they hope that they're going to have millions of views and then they make money. It's just that. It shows the principle of betting. So now that model, obviously, just like venture capital, private equity, with all these parameters, has become global. Even though I must say, to some extent, I'm sure in Europe and to some extent on the continent, we're doing it, but we're not just connecting it that way, right? You know, oh, my little nephew has a little pet project. Let me give you some money. You can go and try it out. That's angel investing, right? But it's true. A lot of people do that, but we don't call it angel investing. So that's why I want to take us back to the definition. Now, what I would say is that, unfortunately, that the model seems to be for, I would say, an ecosystem where capital is easily available, ready to take a level of risk that is acceptable for the available capital, and networks are transparent. And I really love what Leila said, data. As I said, I'm a geek. I always think data is critical and is lacking on the continent. That's why I was mentioning machine learning and AI. It needs data to get to a decision-making point. So I think today on the continent, the data is being crunched by a number of stakeholders. I can mention the Brighter Bridges and Salient, all those organizations trying to bring data to investors, because the biggest problem in financial theory is the asymmetry information between the companies, the startup, and the investor. So to make the story short on the angel investing model on the continent, I think that if we want to get a lot more people to invest, take risk in the startups on the continent, we need to find a model that makes it dead easy at a very small fraction of capital pooled to invest. So I'll give you a very funny example that I thought was an opportunity that was missed. So in Ghana, MTN issued bonds through the mobile money system. It was oversubscribed, I don't know how many times. So imagine you have a mobile money account, the telecom operators issues, not bonds, shares, does an IPO of its shares, and you as an MTN, user, you can buy the shares at the IPO. You know what that did? It dramatically expanded MTN user base, because everybody wanted to participate. They needed to get an MTN chip. So imagine you can basically do crowdfunding for startup through a telecom operator with, let's say, 1,000 bob, 1,000 shilling, 2,000 shilling, and then you contribute. That will make the asset class much more accessible. So for me, in summary, should we be able to crack that code of getting very cheap access to startup and the capital on the other side, that would solve a lot of the problem, because there's really a lot of money on the continent. And I'm not even talking about the pension funds, the asset managers who have a lot of money sitting in treasury bonds, government treasuries, Leila. So there's a lot of money. And the other aspect probably is, having proper startup acts or legal environment for a number of stakeholders who have money to deploy it. There's so many limitations of different institutions to deploy capital that is sitting there, which is a shame. I'll stop there, and otherwise I'll go into my thesis.
Thanks, Steve, and some interesting points there in terms of just expanding the angel investing. Not defining it, because I feel like in the West, if you're high net worth, it's more accessible, and so trying to widen that base in the continent. Thanks for that. Now, Tony, I'm going to jump to you. And Tony, you've done some research. You did the report Chasing Outliers, which was all about understanding the context of early stage investing in Africa. And I'm going to tweak the question slightly. There's what I've just asked, but then I'd like to ask you: are there some models that you've seen, first of all, have broken down once it comes to the continent, especially around this angel investing space? What are those models, and what do you see as the emerging models that, as an aspiring angel investor coming in, you should be thinking about?
Yeah, I think that maybe the thing I'm most excited about would be this idea of like an angel SACCO, right? So it's kind of like, if you have $10,000, don't invest it in one company, but find 10 friends, each of you bring 1,000 for each deal, and every month or every quarter or something, you commit to doing a $10,000 deal together, for example. I think what that does is that everyone gets more experience. It becomes more accessible at the lower tickets. And the 10 of you actually can bring value to the company. Now all 10 people's networks can be utilized for the company's success. So, oh, I know someone in banking, I know someone in accounting, I know someone who could open a door here or there. So not only are you bringing your $10,000 as a group together, you're also bringing your collective wisdom and your collective networks. So I think that idea is kind of VBand is sort of an iteration of that idea. And I think I just want to see more of that, because going back to the initial thing we said earlier is investing in groups, having, when you think about being an angel investor, it really isn't just about the capital. I always talk about the 3 C's. It's capital, connections, and context. So you being part of these deals and actually you having your own expertise in your corporate life or whatever else you do, that's really valuable for some of these startups. So bringing that all together, doing it in kind of a Sako-like structure, I think that's something I'm really excited to see more of on the continent. And I'm seeing more and more of that spring up in, even in secondary, Kenyan markets and other places.
Tony, to your point of angel Sappos, and then I'll jump to you, Laila. There's Laila, I'm sure you know Tony Wainaina, who's written this book on chamas, right? And he just reupdated the book now. He has chama, from chama to conglomerate. And just to give context, a chama is a group of people who come together and they put in money every month. So like, I don't know, it could be $100 every month. It's 10 people. So every month, then they have whatever the amount of money then comes to, and they do that consistently. But one challenge, and I guess it speaks to this idea of democratizing angel investing, that most chamas are faced, is most of their cash is locked in real estate and money market instruments. And actually most of it is money market instruments, then real estate. And that's because there's this issue in terms of how do they make a decision as to which deal do we go for, right? And so then the money just stays there and they never make a decision, and it just keeps piling up and piling up and piling up. And so there's a question for us to consider in terms of how do we make it as easy for people to access angel investing deals and to make decisions without feeling like they have to debate this over and over and over. I just thought I would point that out because it's one thing I picked out from reading Tony's book. Laila, I come to you, and I guess same question, and I know this is something we've debated a lot in terms of how do we take Western models, or established models, if you want to call them, that are coming to the continent, and how do we make sense of them in the continent? And for you, Laila, I guess the same question. Are there some models that you're seeing that have broken, and what are you making sense of them in the continent as for an aspiring angel investor?
Yeah, thanks. It's such a big question, and as Steve would say, that's a whole other thesis. So there's some things that are always the same, and I think the fundamentals of some of the principles around angel investing globally hold, including the fact that you'll lose most of the portfolio likely, that your founders are going to pivot is probably predictable if it's early stage, that cash is king in every continent, right? So that holds true. So those things stand in place. And then what I had said before, that you usually want a business that is more working capital negative, right? And that's linked to the cash is king idea. There's some things in this continent that lend themselves more naturally to angel investing. So this idea of collective investments, my first angel investments were in a chama structure. In fact, it was in exactly what Tony was alluding to, which is a chama that amalgamated a bunch of chamas. So it called itself the Chama of Chamas. But as you say, one of the big challenges is really around governance in these entities. That we really are trying to get many of them, and many Kenyans, I don't know if this is Africa-wide, but everybody's in a chama. And usually whether you've been in a class together and you graduate and people are asking, how do we stay connected? Oh, let's start a chama, you know? So it's a way that people stick in, but because of that social imperative or leaning, there's this idea of the fine if you don't show up. There's this idea of consensus, and it can really, really slow down these entities. And even when you do elect a board, their decisions sometimes, they don't feel empowered to really make decisions, especially if they're going to make a mistake. So some elements of that structure come naturally to us as Africans, but there's a part of it that tends to not fit itself very well. I also think that the context, I think Tony was getting at this earlier. I'm surprised he's not plugging his fantastic research, which if he's not going to talk about it, I'll talk about it. It was really, really good and helpful. Because, you know, so for me, when I started my journey, I did have this idea of myself as an angel investing in ideas, which is something that has come from Silicon Valley. But I've found that I realistically actually invest in people who have traction, who have customers, who have quite a sense of, who have a reputation. My most successful or the angel investment that has become largest, the founder I invested in was somebody who was an icon, very, very trusted by other people in the industry, and had gotten far with his company, but only to the point where, you know, he kind of ran out of cash. So I do think that in this context, this idea of just an idea, especially when people don't have jobs, so many people are entrepreneurs by mistake. They're not really that committed. It's not their first choice. We also have in the Silicon Savannah specifically a cultural fetishization of entrepreneurship, right? So we have this idea, you know, there's people who go from competition to competition, and that's how they make their money. But when you look at the business itself, it's not really a business. So we have all of these things in our context that affect how angel investment plays out. But the biggest, I do think, is this idea that Tony's group tried to share about the market, right? The size of the market, not just how many people are in one geography, because Africa is not China. So China, you have 1 billion people. India, you have 1 billion people. And here we do have 1 billion people, but they're in different countries. And so how do you move your product across? And tech is supposed to take care of that, but it doesn't always. And then the second is really having a realistic appreciation of people's incomes. Right, so we haven't yet gone through the structural adjustment that we're aiming for as Africa, the transformation where most of us are solidly middle class by global standards. And so what this means is that even if you look at Kenyans and what we make, most of us are between $25,250 to about $500. That's actually where the meat of the earning power is. So if your product or service targets people who are much more elite than that, then you have to go continental very quickly, and then you come, you know, bang up against these different borders and the non-tariff barriers and all of this. So when you think about it, you really can't just transplant an American idea of how you're going to scale this company, and as an investor, what you're going to be advising them on. Yeah, so those are some of the ways that things differ. And the other thing, okay, this is not so much that, well, it is. So as angel investing is happening, you also need to be aware of how business works here. So political risk is very real here. I used to really poo-poo it, but now, again, we've all been through a humbling process. Some of us sound like wise old men, the way we're talking. This is not how we used to talk. Yeah, so political risk is also real. So you need to understand what kinds of risks come to play in different ecosystems. And as you get more seasoned, you'll know, you'll get some pattern recognition and be more clear about what's a no-go zone and what's worth a gamble.
Thanks, Laila and Tony. Yeah, your research was really phenomenal. Just talking about how the ecosystem is different, and I guess that should definitely mean that we cannot use the same models that we look at from the West for the continent. And maybe digging on to that specific question and bringing you in, Steve. Right. One question I get from aspiring angels consistently is: should I only invest in tech investments? Right. Am I being a cheat if I call myself an angel who invests in your SME type in deals? And what should be the balance anyway between those two, if at all? Steve?
No, so I mean, thank you very, very much for the question. I have to remind you, my first investment was in a food business in London called Chop Pot. She was doing Ghanaian pots that were for lunch boxes, right? I didn't know it was angel investing, but it was. So actually, what I've learned over the years is that angel investing, as I mentioned at the origin, it was for creative industry. So basically, angel investing, for me, by definition, is just taking a risk on a project or a team for them to succeed. So whether it's tech or not, because tech is hot and is a trend, etc., I think the investing in SMEs that are doing great things is also angel investing. And actually, I've invested in a fast-moving consumer good in Madagascar, equivalent of the KFC, some years back, and I consider myself as an angel. I'm currently considering a poultry business led by an excellent woman. I'm an angel investor. So I think that shouldn't be limited to that. To come back to the real estate question, if you invest in an entrepreneur who is setting up a construction business to do affordable housing, which is one of my passions, it's also an angel investor, because you're not just buying a property, you're investing in the company that is building those things. And you can probably provide your experience, your knowledge about that thing, right? So not just because the hype is tech, that you should only consider yourself as an angel investor because you invest in tech. The caveat I'll give, though, is that, at least that's for me, when I invest in quote unquote brick and mortar type of businesses that are doing great things, because I'm a geek, I always try to overlay a tech element to it, right? But other than that, it's just I find that so long as you believe that the entrepreneur can reach a certain level, it's not going to be a 10x, 100x, 1000x return on your investment, but at least you get regular dividend. Maybe you get 2x. So it's you can even call it mini private equity if you want. You're making me want to make it fancy, or But essentially, you are investing as an angel to provide a team or project the opportunity to scale or grow or test an idea in some way.
Thanks, Stephen. I like that. I'm sure there's some people in the call who probably now feel that they can say, I've done 100 deals also, because everybody says they've done 100 deals. They can list all the tech companies there. Tony, just taking the same question and pushing it a bit more about then the other key question around models that we've seen instruments coming in from the West, SAVE, convertible notes, equity, as the tools that angels use for investing. However, if you layer those with the kinds of business we are discussing now, at times there's no exit potential. So what instruments then do you use for those kind, and just what kind of customization do you make on some of those instruments to make them work for the instruments you're looking at? And then after that, I'll move to some of the questions that are being asked. Tony?
Yeah, I guess for some context on, one more point on the research, which is related, which is I'd like to talk about Silicon Valley venture capital as like a race car, right? It's the instrument. It's a very specific instrument to get you from point A to point B really, really fast, but it assumes that you have smooth road, no traffic, and a pit crew. So what if there's not even a road? So you have to start thinking about what's the appropriate instrument for the context that you're in. So, and I like to say, well, let's talk about the pickies and let's talk about the off-roaders, because we need instruments that are built for versatility, not for speed in a way, right? Or for mobility instead of speed, so which is different. So, I don't have too much to say about instruments. I think that sometimes the easiest instrument, even if it's a templated instrument, is the best way to do it, because you don't necessarily want to spend too much time on the legal piece of it. But what I would say is also, like, so the other thing is, like, I've done a lot of safes, which, we can talk about as an instrument where it's at the very early stage instrument where it's hard to figure out valuation and things like that. But what a lot of people don't realize are on exits. So I saw that there was a question on exits in there in the chat, is that there a lot of angel investors do end up exiting in Series A and Series B. So you invest early, the company raises then like a seed round, and then they do like a Series A round with like a professional VC. And often what's usually not reported in the news is that there's also what's called a secondary sale, right? So the venture capital company is buying shares to invest into the company, and they're also buying shares directly from earlier investors. So that actually happens quite a bit. So for example, like I know in Nigeria, that the big neobank Kuda, they raised a $25 million round Series A. And what wasn't reported in the news was that there was a $12 million bought of secondary. So a lot of those angel investors that got into from the seed round, they actually exited at that point. So, you don't necessarily have to wait for the IPO or some sort of strategic sale. Sometimes you as an angel exits before the company exits. So that's something to keep in mind. So it might be more liquid than you think, as long as the company can get to those stages of investment.
Thanks, Tony. You've also done us a favor. You've addressed also the fast question here. And I also like, that illustration of the fast car on a smooth road, because it's very graphical in my mind, what you're speaking about. Laila, I'm going to come to you, and if you want to comment about the question on instruments, please do, in terms of what instruments you've seen working for these, I guess, non-traditional angel investing that we are doing in the continent. But then I'd also like you to take this question around research. Glad you asked here. Fantastic insight. I'd love to hear more about how you conduct research on the farms or ideas where there's a dearth of data, even in comparison to similar companies, let alone on novel ideas.
So much to say, so little time. Yeah, so on the instruments, it's true. The traditional idea of exits, some huge IPO or the like, is not typical here. We are working on that. I mean, we have the GEMS listing option now. We even have incubators from the NSC to try and bring companies along. But because I've been involved in PE firms like Centum, I also realize that there's a conveyor belt where once the business reaches a certain level, you can usually hand it off to the next one, even if it's not taking that traditional VC route where it's going to be a unicorn and there's millions of dollars coming. There are interested parties in this ecosystem. And in fact, we find that when businesses are good and the founder is trusted, you'll find that actually there's a dearth of capital at that level of PE firms for the companies that are there. So they're fighting for good deals and good companies, which isn't what most people think. When you do go into brick and mortar, sometimes you have to be satisfied with a good dividend, but getting a check every year, what's not to love, right? So here it's a little bit different. I do like that analogy. I know many people have tried different animals. They say if it's in Africa, it's a camel. And then Dazzle Angels, they're saying it's a zebra because, but we're trying to get away from this idea that everything has to be a fast car, right? And that you have to raise a lot of money, which puts a lot of pressure on you. And one of the things that I've discovered in this ecosystem is, firstly, I really want us to encourage brick and mortar or non-tech businesses because they're on Main Street. They're not glamorous, but they create jobs and they grow well. And they really can be the backbone of an economy. So it's good to have a mix of businesses, but we really should stop relegating them to the uncool side of the classroom, The other thing that that came up when you were speaking that I thought about is this idea of alternative instruments. So it's true that you know, you can go in and offer and buy up the equity, you know, so invest in the company. But sometimes from the entrepreneur side, one of the things that we find is lacking in this ecosystem is really flexible debt, right? So something that might be based off your profit or based off your revenue, and you share that with investors, that would really help a lot of people in this ecosystem, because you could be going happily and then you come against an election, demand goes down for no reason. It's not because the business is not good. And then if you're stuck somewhere where there's a firm that needs to, the firm that has invested in you needs to exit in 5 years, they're under a lot of pressure, or you've borrowed millions of dollars, you hardly sleep as the entrepreneur, right? The amount of pressure is really not right for this environment. So I really would like to encourage us as angels and the ecosystem in general to look at more innovative financing mechanisms that work better for this environment. On the question of data, it's really a pain point. When I was in real estate, as I explained, I had been doing real estate investment in the US, and there they have the multiple listing service, they have census data. Data is just everywhere. And the multiple listing service, it's so efficient where you can tell a house that has 3 bedrooms and 2 baths, if you add a 3rd bathroom, what does that do to the value of the house? So you're in that particular neighborhood so that you know whether or not to add a bathroom, whether you'll get it back in the price. Here, I mean, it's incredible as an investor what you get there. But then here, on the flip side, when I was doing developments, we would go from door to door talking to watchmen, because this is the data infrastructure of Kenya, right? So you go to the security guard, you send your team out, and they ask, when did this development start? When did it end? How quickly did people move in? That's how you get your absorption rate. I mean, it's so manual, you know? And then I realized if there were firms that would bring this kind of data online for health, for, you know, for all of these sectors, for education, I would invest in that, because it helps the whole, it greases the wheels of the economy at so many different levels. And then because we're 80% or 90% informal and getting more so, any kind of tool that really learns to get proxy data and bring it in so that people are able to make decisions would be very, very valuable for business. Of course, monetizing it and selling it and finding out who the market is, that's the work of the startup. But that's a very, very big problem in Africa that, you know, if I could solve, I would put all my portfolio into that for a while, because it helps everything else move.
Thanks for that, Laila. There's another question here which I'd like to maybe, and it's just what are your ticket sizes? Are they usually invest in, and how flexible are you on that as an angel investor? And I'd like to just couple that, and we'll go around very quickly on that question. Couple that with this other question around, do you only invest in startups as opposed to revenue? Which is really just jumping directly to your specific strategy. Sometimes the investment is critical on low customers, etc. So, you know, do you invest only in post-revenue startups, or do you then also invest in pre-revenue startups, and the ticket size that you look at? Steve, do you want to go first?
Yes, no problem. Thank you very much. So typically it's 10 to 100 for me, $1,000, to be very specific. I would say the 100,000 one are obviously more post-revenue, etc., etc. The 10 really depends on the team, the product market fit specifically. Team and product market fit are usually those two that I look at the earlier stages. I would say I'm sector agnostic. There's a few sectors for now that I want to pause on, specifically those who tend to be more of an infrastructure play rather than a tech play. I'll explain. For instance, if you're telling me that you're building a fleet of, I don't know, EV motorbikes. So I'll tell you, okay, are you focusing on the bikes, or are you focusing on the batteries and charging stations? Because these are two different businesses, right? If you're focusing on the batteries and the charging station, it's an infrastructure play. Whereas if you focus on, on the motorbikes, getting customers, getting people to use it, then, maybe. So, and, generally speaking, anything that is long-term capital intensive at my level as an angel, I tend not to invest in. That's kind of, in summary, the bigger thing. And I would say anything, for instance, that is in agriculture, but more on the primary side, I tend not to invest. I would do it personally on a separate pot of money, quote unquote, but that's something where I will have an entrepreneur that basically is physically on the ground, etc. And because, weather, all these factors, I've been there on that. So yes, thank you.
Thanks, Steve, for that. Tony?
Yeah, traditionally for me, it's similar ticket sizes as Steve. And I'm kind of in a weird stage right now because I've just joined this group called Verdant Frontiers. And interestingly enough, so, I was running my firm, Kinyungu Ventures. So Verdant Frontiers actually will acquire Kinyungu Ventures as well as my portfolio. And then I'll essentially as a stock swap. So now I can sort of invest under one umbrella of Verdant and Kinyungu. So we're still trying to figure out what our sort of tech investment strategy is. I think, just going on the principle of we want to invest in things that we can add value to. I really like ag tech and fintech, and more broadly, I like SaaS businesses since that's really my background. So that's probably where I'm at in terms of the revenue question. I tend not to do pre-revenue just because it depends. It really depends because for me, I want to see some sort of traction or some sort of pivoting or some sort of, what steps has the entrepreneur gone through to make sure what they're doing is probably on the right track. So I tend to shy away from that, but that's, my typical role.
Thank you. Laila?
I'm also very versatile. I would say that my smallest investment has been $2,500. My largest has been in the entry, 67,000. But for that one, that was the 67,000, they ended up being a bunch of follow-on investments after that as they grew. And in the end, it was well over $200,000 by the time I stopped investing. I think it's important to understand that what I have come to see is that investment can take many forms. And it used to be in the beginning that I thought it was always about writing a check. But over time, I've learned to sit with entrepreneurs, even people that I might not necessarily be investing in, and ask them, what do you need this money for? And then see if we can mobilize in kind, because is it space? Is it people? Is it a license? If it's a license for a financial firm, can't you partner with somebody so that you use their license? I can give people access to my credit lines that I don't use. The potential to borrow is something that many entrepreneurs appreciate and that I can offer. So sometimes for those, it's tricky to price because you're not giving the money, but at the same time, you're taking a risk. So I've come up with interesting ways of structuring pricing around what the contribution is quantified as. Yeah, so that's been my range. Lately, because I'm investing more collectively, the amounts are coming down a little bit, but then I'm able to do more. And these years, I actually set a budget and say, this is how much I want to do this year. This year has been very difficult because the opportunities have been so many and so good. I keep telling Jason, no, don't call me. So that's what it works. As I said, I mostly like health, education, data, and financial access. Those are the areas I feel I can make a difference. And I can go outside that with other people, but mostly that's where I would like my focus to be for now. I do love to invest in female founders. It's not very easy to find because, another thing we might not have mentioned is sometimes you look at 100 deals and invest in maybe 2, of the ones that come through, because every day, once words gets out that you're an angel, you start getting approached several times a day. Do you guys agree, right? Like people find you somebody once called me from New York. I don't know how he heard about me, so you have to also become much more systematic about the way you look at deals, and you really narrow down quickly. Otherwise, you get overwhelmed. And then, yeah, as I said earlier, for me, it's post-revenue. It's all about the founder. I want to see that the person has grit, that they're well respected, that usually this is something that they're committed to, and they have their own skin in the game, not always in money, but that they've kind of stuck with it. They understand their market. They're likely to be able to execute. If it's a team, the better.
Thanks, Laila. So as you're speaking, I was nodding my head because, yeah, at first I think, yes, this year I've seen so many deals where at times I wonder, where do you get more capital? Because there's just really good opportunities, really good entrepreneurs who are trying to solve some really good problems in very innovative ways. And one of the things I like about angel investing is actually this idea that there's some things that you never even thought were problems until a startup pitches to you and you're just like, yeah, that's a really big problem. Why did I ever think of that? And you're like, really cool, yeah. So I think we have to get to the parting shot beat. But I'm going to ask everybody to do a parting shot. But as you're doing a parting shot, our topic today was still on angel investing strategy. So I'd like to also add this question of how do you advise, aspiring angels in terms of how they should think about their angel investing strategy and how they should structure their angel investing generally. I think we've thrown very many ideas, and someone would be like, "Oh my goodness, now I don't know where to start in the first place." Right? So, Steve, parting shot, and then what's your advice for someone in terms of structuring their journey, in terms of the structure?
Yeah. So I would say the critical point for me, at least when you want to start in the angel investing journey, is do it with others who have done it, who make your life much easier. And I would say that your first investment should be in something that you truly care about and that you understand. That'll make your life much easier. And that's, what I feel that will really get you hooked to it. And also, I would say for the aspiring ones, try to be disciplined in hindsight. So, I think it was Leila who talked about budget per year. I also do the same, because otherwise it's FOMO and you take money from another pot that should have been stuck there to put there. Realize that actually you shouldn't have done that. So you have to refill that other pot. So it's very important. So in summary, invest, at least do your first investment with other people in a business, startup or not, tech startup or not, that you understand and then it about. That'll make your life much easier.
Thank you very much, Steve. Tony?
Yeah, I mean, I really agree with what Steve's saying. I would say, look at 20 deals and, get some decks, look at a bunch of decks and start to see kind of what's going on and what people are saying and offering. And then ask other angels about the first 3 deals and what they learned and what they would have done differently. And then just go ahead and do a deal or two and just chalk up the first deal as really like your education. It's like, this is your crash course MBA on angel investing. Do a deal or two and see how it goes.
Tony, I couldn't agree more in terms of the first deal. And that's whenever we speak to other angel groups or aspiring angels, and they're sort of like, what should we do first? We are thinking about, I don't know, getting a lawyer to do an advice for us in terms of the structures in the ecosystem. I'm always like, you know what? Don't do any of that. Just first of all, figure out one deal, get on with it. Because first of all, it tells you if you're in a group who's serious and who's not. Then it teaches you a lot in terms of just even how comfortable you are in terms of making angel investment and what kind of deals you want to look at. So I couldn't agree more with the point you just raised in terms of get your first deal done as fast as you, okay, not as fast as you can, of course, talk to the angels, get some medication going and all that. Laila?
Yeah, I think that even from, let's say, 10 years ago, the ecosystem has changed dramatically for angels. We have the African Angel Academy now through VBAN. If you want to actually get into a structured way of learning how to approach investing, there's all kinds of groups that you can access through the whole ABAN network. Locally, with Victoria Business Angel Networks, there's master classes. You can start to interact with other angels, take part in it and understand what's happening. And getting into the organization doesn't take a lot as far as what it costs. There's also other angel networks in Nairobi now. This is not how it used to be before. It used to be a long drought and desert before you stumbled upon an angel before. And now they're getting more organized and getting more public about what they're doing. So it's a really good time to be somebody looking for an angel investor. We're also working within ACES, which is the Early Stage Investment Summit that a lot of you are familiar with. Really trying to explore policy and other approaches. There'll be a conversation next month, actually, about what is it that we can do policy-wise, maybe by allowing pension funds to allocate a portion of their portfolio to, so that we just start moving the money into this sector and helping early stage entrepreneurs get to the next level. So that's how I would start. Get into a group, join these networks, start learning formally, but also, as everybody else says, start investing.
Thank you very much, Laila. Thank you, Tony. Thank you, Steve, for those really good insights. I think one thing I would say I've picked from these conversations that I participated in quite a number of them is this idea that we need to be a bit more open in terms of how we look at angel investing in the continent and how we define angel investing, and sort of like change our lenses to a certain extent, because there's a big need for cash, and it's not only in tech startups. There's a big need to solve so many problems, jobs included, plus all the social problems that we could sort out. And it's not only in the tech startups. So we need to widen our view around that. So we're going to finish now, but I've seen there's a couple of people I'd like to just maybe bring into the conversation, maybe just to say, oh wow, I'd seen the Secretary General for ABAN, but she's just dropped off on the call. So I'm not going to bring her in now because of that, but thank you very much. Adelaide, I don't know, I'm going to pass this over to you as we look to wrap up.
Thank you, Stephen.
Adelaide, are you there?
Sorry, Stephen. Thank you, Stephen, for the wonderful session, as well as the panelists. I hope you have taken some notes. If you're thinking about angel investing, please reach out to us, reach out to VBAN. We do have some training material in partnership with the African Angel Academy. In the event that you don't know how to exactly go about it, we are more than willing to to take you through it. They're also offering the course. You can pay for it and see how to go about it. Learn from Stephen. I think we also have content from Alexandra. If you're interested in impact investing, we do have content around that as well. So there's no limit as to what you can learn from us or from the ecosystem. Thank you so much for your time, and we'll see you in our next session. Thank you. Bye.
Thank you. Bye.
Bye.